Hi everyone. Today, let's see if we can find some value in today's bubbly markets. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So to me, markets do feel a little bit bubbly, but let's see what they have to say here. They start off by saying the UK is a little bit unloved. We've been seeing European markets outperform here a little bit recently. In terms of opportunity, they mentioned the equal weighted S&Ps are a little bit less exposed to these bubbly markets because they are equally weighted and less concentrated in their exposure. You also have the Great Britain Distant 100 ETF and the Artemis Income Fund. So a couple opportunities there. They also mention Asia, Fidelity Asian Pacific opportunities as a place where markets are a little bit cheaper if you think crypto is still a bubble. The other thing here is unprofitable growth stocks like Peloton, which rallied up a lot, and then they've fallen all the way down to around $4. In terms of opportunity, they do think commodities are a better environment. We've been talking about the commodity bull run for a little bit now. Gold and silver have been on a run, copper's running as well. And a better place to look is the miners, commodity miners. They're a little bit on the cheaper side relative to their commodities, gold miners being one of them. BlackRock World Mining Trust is an opportunity with exposure to copper and gold, and then gold itself, gold miners, same kind of thesis there. Gold has rallied up a lot. Gold miners haven't really followed through. And if you're in the real estate bubble, then you could look for data center REITs. I'm a big fan of REITs. I own quite a few in my buy and hold portfolio. The office market has been under pressure. A lot of these commercial real estate funds have struggled because of it. But you could also look towards that digital infrastructure income fund as a potential alternative play because they hold the physical ground for these data centers, which is a booming market and will continue to grow in my opinion. Moving over to fear and greed, you can see we finished the week at a 53. A week ago, we were at a 64. So you can see on the timeline, we're definitely rolling down. Even with the rally that we saw on Friday, we didn't really see the fear and greed indicator go any higher. Momentum still in greed, strength still in fear, so mixed on those. Breadth in neutral, you can see breadth has been rolling to the downside. We've been talking about that, and I do expect that to continue. Put call ratio, neutralized here around that 0.8 area. Volatility did dip down on that Friday session after seeing a pretty decent bounce on the Wednesday session, so we'll see how that plays. And then looking at bonds, safe haven demand still in greed, junk bond demand still sitting in fear, so mixed on the bonds, and we've been seeing those chop around a little bit as well. Moving over to the AAII survey, this stepped up significantly, all the way up to a 47 here for the bulls. That is significantly higher than what we see historically, and it's actually much higher than we were the last 2 weeks in a row. I thought we would be a little bit lower this week, but it didn't quite work out that way. The neutrals got squeezed down to 26. The bears actually stepped up to 26.3 from 22.3. So bears increasing and bulls increasing, neutral getting squeezed here. So markets are definitely a little bit concerned, which is interesting for me. I'm more in the neutral category. I do think we're going to see more bearish price action at some point, but we really haven't seen that bigger breakdown quite yet. Moving over to seasonality, you can see it is supposed to be quite bullish here for the end of the month. May seasonality hasn't really followed this schedule very much. It's been pretty much up or sideways, not really seeing that weakness in May that we typically see. But in theory, supposed to be bullish here in the last week. And then looking at June performance, pretty much sideways choppy action, slightly bullish on average. But you can see opening up here on the 3rd and then finishing just barely positive, really on that last little run. So sideways markets for June, more neutral. And my concern here is that we didn't see the dip in May, and now we might be topping, in my opinion. And now if that's true and June is a choppy period, we could see that more dip low version of June than we typically see. Moving over to the calendar, you can see Monday is off, so markets will be closed, but Tuesday, Wednesday, Thursday here are supposed to be quite bullish. And then we get some data here on Friday, and that's mixed. So technically bullish, like I said, for the end of May. And then you can see here for June, pretty mixed across the board. Quite a few bulls, quite a few bears on the signals. So pretty mixed, like I said. 3rd of June, up 28 out of the last 36, so quite bullish there. Up 10, down 11 here, ranked 10 for the 6th. And then looking a little bit further here, you can see triple witching this month. So you have quarterlies expiring, which can lead to volatility in the week prior. So you can see that volatility on the Tuesday, Wednesday sessions. Moving over to the economic calendar, you can see Monday, Autodesk, Salesforce on Wednesday, HP there as well. Thursday, the bigger one for the week, got Costco, Marvel, Dollar General. Ulta Beauty, always fairly interesting. Best Buy in there as well. Hormel Foods. That'll pretty much wrap it up for the week. We're definitely on the tail end of earnings at this point. Moving over to the economic calendar, Monday is off, but you can still have an FOMC member speaking, so you got one there. Not expecting a huge impact. And then for Tuesday, you have consumer confidence here at 10 o'clock. That's going to be interesting. FOMC member speaking. Some note auctions 2 and 10-year. 2-year, definitely going to be watching that one closely. 10-year note auction for the Wednesday. Beige book comes out. Nothing crazy. And then for Thursday, unemployment rate for the Eurozone. GDP numbers here for the United States. That's obviously going to be impactful at 8:30 on Thursday. That's a big one. Pending home sales, crude inventories. Oil's been kind of moving around quite a bit. Caught a bit of a bounce. Been watching that one a little bit closer here recently. And then don't forget core PCE and headline PCE numbers at 8:30 on Thursday. So definitely Thursday going to be a bigger volatility day in my opinion. And then for Friday, CPI for the Eurozone, as well as the PCE price index, core and headline for that Friday session. So more inflation data for the year over year and month over month numbers. And then Chicago PMI at 945. And that'll pretty much wrap it up for the week. And just to be clear, core PCE prices for Q1 is on Thursday versus the actual PCE numbers there on Friday. Moving over to Max Pain for the end of next week. This is the 31st, and there are just a lot of puts in the market. So you have some calls here at 535. So you wouldn't really expect it to go too much higher, but then you got puts here at 520, 515, 510, and those are pretty decent put walls here, especially for an off week. So total options, 1.5 million, quite high. Put call ratio, pretty high there at 2.77. So your support level, 520, which is still about 2% lower, which is pretty substantial for the week, but that's where I would expect to find some support, and then a finish between 520 and 530 makes sense. So pretty much right where we are. 521 to 525 also possible in here. I think we're going to go a little bit lower, but I think a 2% down move for the week is the most we will see. Moving over to the charts, starting off with the S&Ps here, you can see we got a 0.03 finish, so basically a doji, completely flat. We're still hovering just above that trend line here, and this is the week that I expected. I did expect sideways chop, if not a little bit down, and you can see here on the RSI, we're right in that zone where you would expect to find some resistance. So RSI, clear divergence, right at the SMA, looking for a bigger down move. This has been 5 weeks in a row of technically bullish price action, even with that last week being just barely positive. Really, I would expect it to pull back at least to that 9 EMA down around 51.78. There are still a lot of puts in the market, so again, like we saw in Max Pain, 515, 520, certainly an area where you could find some support, but even with that, that would give you about a 2% down move, which does fit with this overall thesis. And then looking at that daily chart, that Thursday session is the one that I am pointing to as a turning point. You can see we tried to go higher, we tried to break out, gave it all back and then some, ended up finishing down 0.73 on the day. Momentum here continues to roll to bearish, and you can see it again on that RSI. Clear breakdown, retesting the SMA zone, and then I'm expecting a bigger breakdown. We've seen this a million times right here. Breakdown, retest, further continuation down. So looking for that as an area where we could find resistance. I can't imagine that we're going to make higher highs. Everything here to me says that lower lows are coming. The question is when, and you might need to be a little bit patient. You can see we got here on 21 March in comparison, and really before we had major breakdown, it was all the way here on 11 April before we had that consistent down move. So took about 3 weeks of consistency. We've been here for about a week and a half, so could see a little bit more price action, but eventually it will roll down in my opinion. Moving over to the Tasty charts here, you can see they actually had it as a slightly bearish candle. Interesting. Open was 529.57, close was 529.44, so down just by a few pennies. Momentum still bearish here on the volume weighted MACD. You can also see a slight step higher here on the ATR trailing stop. That's still sitting at 488.67, so it is a long way down for that. It is below this most recent swing low, so that's where it's kind of hovering right now for your trailing stop on the weekly chart. And then that upper ATR band, if we were to go higher, that would be sitting up around 541.22. Again, I just don't think we're going to get there. I think we're going to stall at this second ATR band and roll down to that mid-range, which would put you right around that 503.78 area. And then looking at the daily chart here, you can see we're grinding on that upper ATR. Big pullback Thursday, currently holding that 8 EMA, but ATR stop sitting at 520. That is where we expect to find a little bit of support, at least this week. And then you can see momentum on the volume weighted MACD rolling to bearish, just like we saw on the trading view charts. And then it is worth mentioning here on the 4-hour, ATR trailing stop is bearish at this point. So your upper resistance is 536.41, and we are right in the mid-range. Big dip down, testing the mid-range. That's normal. Typically this rolls to bearish if you find resistance on that mid-range, and that is where we're at right now. So again, everything to me is pointing to bearishness at some point, but like I said, timing can be an issue. This could chop sideways for another week or so before we start to see that bigger roll to the downside. Moving over to the Nasdaq, you can see we did get a pretty bullish finish here for the Nasdaq. Momentum continues to roll to bullish, RSI breaking above the SMA, but really this is almost entirely due to the Mag 7, and really that Mag 7 movement is almost entirely due to Nvidia and their really strong move here this week. So it's kind of hard to say. Nasdaq rallying aggressive. Upper resistance, if it could get there, would be up around 19,000. I don't really think that that's going to happen. I think the S&Ps are going to roll here, like I mentioned, and I don't think the Mag 7 can really keep the rest of this market going in the upward direction. So Nasdaq might chop sideways. Maybe the Mag 7 can hold it in there a little bit better, and the Nasdaq becomes a little bit more defensive. But either way, I still think markets are going to roll to the downside at least a little bit. And then looking at that daily chart, you can see really the same thesis from Thursday to Friday. Did get a little bit more of a bullish day there, but didn't recoup all of the losses from that Friday session. Momentum continues to roll down. RSI looks better. It's still above the SMA, but it is basically flat here from those previous days, and it is at a higher level, just barely. So something to keep in mind. Eventually, I do think this is going to roll down, but right now the Nasdaq does look like a little bit better shape based on the price action versus the SPY. Moving over to the Tasty charts here, you can see that bullish week. Second upper ATR band there sitting at 461.35. Just barely came up short this week. Momentum, it is rolling to bullish just a little bit. You can see it here, basically flat, but slight roll to bullish. ATR stop did roll up here a little bit, so everything still looks decent on the price action. I still think there's weakness underneath the hood, but right now, price action overall does look decent. And then looking at that daily chart again, right on that upper ATR, that is at 458.46. And then here, same thesis as the SPY, continuing to roll to bearish there on that daily chart. And then 4-hour chart, again, same thesis, upper ATR resistance, 464.72. That's where you would expect to find resistance. It's above this previous swing high. And if we did get up to that upper area, that's where you would expect to break down from. Momentum on the 4-hour rolling to bearish, even with that bullish candle here on the first candle of that Friday session. So overall, not that different, but Nvidia did make the Nasdaq look a little bit better on the price action. Moving over to the Russell here, you can see the Russell was down 1.27%. So the Russell, in my opinion, is a bit of a leading indicator here. You can see the high was not higher than this previous one from the end of March. Seems like this is rolling down here, in my opinion. Hit the 9, hit VWAP, caught a little bit of a bounce, but it's below 206.50, so that's your current resistance. You would expect this to roll down a little bit more, in my opinion. 21 EMA sitting there at $200.72, so right in that support area here. If that area breaks, then you're looking at the 200 all the way down at 194.27, and that is definitely not impossible to see. You can see these 3 bearish candles in a row, super bearish, each one of those over 2.5%. And we hit that 200 SMA. So could absolutely head right back into that same zone. And right here, you expect this to be a lower high off of this previous high. So that is definitely bearish. And then if you get a lower low, maybe we get all the way down to that 55 EMA in the 189.78 area. So the Russell looking significantly weaker than the other two. And then looking at it here on the daily chart, again, Thursday session extremely bearish, 1.64. Did catch a little bit of a bounce from the 21 EMA on Friday, but still significantly lower bearish momentum here. And I would expect this to continue to roll down in my opinion. Moving over to the Tasty charts on the weekly, you can still see that bearish candle hit the 8 EMA, caught a little bit of a bounce from there. Momentum still bearish, so this could absolutely go lower. Last time we tested the 55 EMA in there at 191.01, and right now that's trading at 193.13. So again, you would expect a retest in that zone at least. Haven't seen any volume on this run. Last time we saw big volume was on this big down candle. So the volume is coming through here. Slight retracement. You would expect to follow through here over the next 2 to 3 weeks, in my opinion. So bearishness yet to come on the Russell. And then looking at that daily chart, hit that upper ATR band, rolled down from there, hit the 55 EMA on the daily chart. chart, 202.40, and now that was trading at 202.29, and now it's trading at 202.40. So basically flat. Momentum on the daily chart, rolling to bearish even more aggressively, just like we saw on the trading view charts. Overall, this still looks bearish. It's below the 8 EMA, sideways choppy action between those EMAs. Almost tested the ATR support there at 201.51. Again, I think that's going to break. I think this is definitely starting to show some more bearishness. Last time you got a big candle like that was here on 4 April, and that resulted in a test of that lowest ATR band, which right now is trading around 195.65. You can see on that candle, it was trading basically at that same level, almost completely flat. And by the time we touched it here, that was all the way down at 191. So this could absolutely take a few weeks, and I do think it's going to do it that way. Moving over to the Dow here, you can see this was also quite bearish, down 2.33%. Bearish momentum, RSI breaking down from the SMA, absolutely looks awful. Even more bearish than the Russell in my opinion. It did throw a higher high just barely and then gave it all back and then some. Big engulfing candle, just like we saw back here on that 1 April candle, led to another follow through candle. That is what I'm expecting here on the Dow as well. So I think these older markets, the Dow and the Russell, are really forecasting some bigger down moves, and tech was just propped up by Nvidia like we saw on the Nasdaq. So older markets, non-tech markets are definitely rolling down. SPY managed to stay flat, but the Russell and the Dow absolutely rolling to the downside, and I think there's more of that to come. And looking at that daily chart, you can see here Friday session was still bearish, so significantly different than the other major indices. The Dow continuing to show bearishness, momentum continuing to roll down, RSI already bearish. Now the question is, where does this stop? Is it going to hold in this zone? I would expect it not to at this point. Probably going to roll down closer to that either consolidation here around 384.76 at this previous high. If it holds that, might be in decent shape, but I would expect it to roll at least into that zone. Moving it over to the equal weighted S&Ps, you can see a very similar thesis to the Russell. High, lower high setup, big bearish candle, 1.25. Momentum, bearish, RSI breaking down from the SMA after a retest. So everything looks bearish here on the equal weighted S&Ps, and you can see it fully engulf the previous candle. Looks like it's set to move lower. Daily chart did look a little bit better than the Dow, but not by much. Big bearish candle there, 1.4%. Gave a lot of ground back, 21 EMA touched. Momentum bearish, RSI just slight bounce here. I would expect this to continue lower in my opinion. Touch that 164.87 level, which is your current support. If that breaks 162.57, and then it would not shock me if we got to this previous low. With the lower high setup, you do expect a lower low at some point. And then if that were to happen, support would be down around probably 155.79 in my opinion. Maybe the 144 EMA, 157.92, but 155.79 does make more sense in my opinion. Moving over to the ratios, looking at SPY Russell and Nasdaq SPY, you can see the Russell absolutely underperformed. SPY managed to hold in that same level while the Russell went down. Momentum basically flat here, still in this sideways choppy zone, not doing much of anything. And then similarly on the Nasdaq, massive outperformance here with Nvidia rocketing higher while everything else either held flat or went lower. Momentum swinging to bullish, RSI breaking out there. So Nasdaq continues to outperform, seems like the best market to be in, at least in the short term. And like I said, the older markets, the Russell and the Dow, continue to underperform. Moving over to the SPX divided by the M2 money supply, you can see we did overthrow that upper level here on that March high, pulled back to the mid-range, rallied right back to that upper trend. Same trend from here, same trend from the low here. Hit that level, started to doji. I would expect it to roll down like it did last time here. Certainly it could grind along that level a little bit, but overall I do think it's going to roll down. And then you can see it on the RSI, breakdown, retest, breakdown, similar to this. That is what I'm expecting. You can see the SMA is trending down as well, which is also a bearish indicator for me. Overall, still looks very similar to the other markets. And it is worth noting that on the SPX divided by the M2 money supply, this current level is basically the same exact as the March high. So you didn't really get a higher high on this indicator. So that's a little bit of a lag on this ratio versus the regular markets, which to me means we're getting divergence on major markets, and you would expect this to eventually follow through. You can see momentum here on the daily chart, definitely bearish. Similar thesis. This SMA is trending higher on RSI, but it is broken down. Could test this again and then break down. Usually when it's trending up, you do get a bit of an overthrow. You can see it here and then here again. but once it starts to downtrend, you do get those lower lows. So might take a little bit longer on that daily chart, but the weekly chart for me is still showing bearishness. Moving over to the Mag 7, you can see here it was a very bullish week that carried basically all of the gains. The Mag 7 was up almost 2% and Nvidia was almost all of those gains. So see how that plays out. You can see this is a clear zone where you would expect resistance. Touched it here, pulled back dramatic, didn't quite get there, pulled back from there. Now we're here again, waiting to see if it's going to roll to the downside. Nvidia still looks very, very strong, and it does have some room to the upside before it hits major resistance. Momentum bullish, RSI overbought on the daily chart. And you can see that same thesis here on the weekly chart. Momentum swinging to bullish off of that move. RSI, though, moving lower. Testing that zone, could see a breakdown from there. It's not impossible. It's certainly interesting. You can see definite divergence. RSI much, much lower at 73. Previous RSI high was at 82.98, and that was the high here from 18 March candle. So significantly higher prices with weaker strength. Eventually, you would expect that to roll to the downside. Moving over to Apple and Tesla, you can see Apple was up 0.06, so not a whole lot. Hit this trend resistance. Go ahead and extend that out. Hit that level, overthrew it just a little bit. You would expect it to roll down, in my opinion. If we continue to grind along it, upper level would be around 192.39. If it breaks down from there, you got some zones of support down around that 182.37 area. So still looks good. Momentum and RSI are bullish, but understand that it is at a zone of resistance. And then looking at Tesla here, we've been talking about this for a while. It's been a downtrend. It is holding at this 9 EMA on the weekly chart, 197, 170.39, 21 EMA just above it there at 184.34. It's been a long downtrend. This has been moving lower since mid-July of last year. It seems like we might have bottomed, got consolidation, dip low, quickly reversed consolidation. I still like this a little bit better than Apple. Continues to find a base. I think it's going to swing higher. Then we'll see what happens. I've been talking about this for a while. Hasn't quite followed through yet, but I do like Tesla in this zone. And if it can break higher, I think the 55 EMA would be a resistance up around 218.51. Moving over to Microsoft and Nvidia, you can see Microsoft right at all-time highs, right at critical resistance. Momentum says this could swing bullish. RSI breaking out back above the SMA. So right now, Microsoft looks good. Trend resistance up around 441.92. And then Nvidia, obviously super bullish, 15% to the upside. Huge swing here. If it goes higher, next resistance would be 1195, right in that 1200 zone. Notice clear divergence, strength not nearly as high, but the previous strength was all the way up at 91. That's super uncommon. Very, very rare do you see a 90 plus strength. It's still very strong at 77, so I don't know if the same rules apply to that, but right now still looks bullish, still super overbought. Divergence. Momentum strong there, so interesting to see these continue higher. Strong candle on Microsoft as well. That was 2.37%. Not nearly as strong, but still decent. If it breaks higher, like I said, absolutely could get to that next trend. And Nvidia still looks very strong, closing right on the high like it did. Moving over to Meta and Amazon here. Amazon with a pretty big down week, actually. 2.14%. We talked about this being a double top. Breakdown last week, continuation this week. Zone of support right at VWAP, 180.12. If that breaks, 21 EMA down at 174.14, which is right at my level, 174.23. And then Meta, slight positive candle, but right here at the 9 EMA, right at VWAP, 481.52. Momentum did step to bullish on the weekly chart, so that is interesting. Still in consolidation between the 21 and 9 EMAs, so waiting for some clear direction there. If it rejects 21, I would expect to break, head towards these previous lows around 429.50. And then if that breaks, next level for me, 404.91. So interesting here. Meta looks a little bit more bullish than Amazon. Amazon does not look great with those two bearish candles in a row. Moving over to staples and discretionaries, both of these were bearish on the week. Staples broke my level, 77.50, so that looks like it's moving down to the 9 EMA, down around 75.88. Would expect at least one more bearish candle there, momentum rolling down, RSI probably going to break that SMA. You can see it's right in that zone, critical zone there. And then discretionaries, big breakdown candle, 1.77%. Touch that level, 174.78. If that breaks, my next one is 170.68. This does look like a giant left shoulder head, right shoulder. So your neckline would be down here. We tested it in January this year, tested it again April of this year. So if that zone breaks, this does have a lot of downside potential, and that does look quite ominous in my opinion. If discretionaries break down, that's going to carry a lot of the markets with it. And again, this is your older economy, not tech, but all of the discretionaries and even staples are starting to break down. So tech holding up there, everything else seems to be weakening. Moving over to transports and financials, transports have been falling off a cliff here. Big down week, 3.42%. Three big bearish candles, sideways choppy, big bearish candle. You would expect at least another continuation there. 144 EMA down at 61.02. And it's interesting to see transports cratering as much as they are, even with the Dow holding up a little bit better. Momentum super bearish, RSI super bearish. You would expect this to get to oversold conditions at this point. Again, left shoulder, head, right shoulder maybe. So we're in that neckline here. Could be a massive breakdown. If it does, that's likely to carry markets, at least in my opinion. And then you can see pretty much every other sector, like I said, financials here, 2.07% to the downside, momentum bearish, RSI breaking down, clear retest, so break, tried to recover, sold off, didn't even test it, quite bearish. Eventually you would expect that to move lower again, and you can see the divergence, 83.36, current level, 71.48, so with a higher high in there. So again, I do think that this is going to break down. Basically everything but tech was bearish on the week. Moving over to oil and gold this time. So we got oil down 2.34%, momentum bearish, RSI bearish, clear breakdown. It's right in the same zone in terms of wicks, but you would expect this to go lower. 200 SMA sitting there at 83.58. If that zone does not hold, we're probably headed back down to the 69 area or potentially all the way to 66.50. Oil's been not doing super great. You can see a high, lower high setup. We thought that this might rally here on the shorter time frames, but weekly chart clearly showing some bearishness. Then looking at gold here, you can see clear double top, wick to high here on 8 April, and then this most recent weekly candle touched that same level, 225.09, overthrew it just barely and then sold off big, 3.46%. Momentum swinging to bearish, RSI breaking down, you can see it here, so that's a significant change of conditions, and I would expect more follow through on a move like that. So seeing commodities pull back a little bit, pretty interesting. Moving over to breadth, as you would suspect, both of these were big bearish candles. 20-day breadth, significant breakdown below 51.75. After the slight bearish candle there, momentum bearish, RSI breaking down. You would expect some more follow through there. And then looking at 50-day breadth, big bearish candle rejecting off that 21 EMA. Momentum probably going to resume a down move just like it did here on RSI. You can see it tried to break higher, quickly reversed. So breadth showing more bearish conditions set to come. Maybe tech can continue to be the outlier, but the overall markets are looking to go lower. And then looking at 200-day breadth, very similar thesis, left shoulder head, right shoulder kind of. Overthrew it just a little bit. Momentum bearish, RSI, same thesis. Breakdown, retest, tried to overthrow, continuation lower. Bearish candle, 9.8%. Needs to break that 64.74 area. If it does, you would expect that to continue lower. This is a critical zone. Last time we got here, we broke down. Got here again, broke down, and we are here again looking for a breakdown. See how it plays, but right now this does not look great in my opinion. Moving over to the dollar here on the weekly chart, managed to turn a positive week. Momentum continuing to roll to bearish, held this trend in here, a low, higher low, higher low. If it pushes back up, you would expect to push to that 107 area, maybe overthrow that, get to 108. Thought we were going to get a big move higher, bull flag, move higher, but we ended up chopping all the way back down to this trend line, caught a bit of a bounce there. 104.4 is the current support, held that level this week. So critical zone, needs to break higher now if it's going to do it, and then start to push to that next higher high. And if it does, I do think that's going to be quite bearish for markets. If you time it out, mid-April, that was the same move. And now you can see it here getting set up for that next move higher, which should be bearish for equities. Moving over to yields, pretty mixed on the signals. 2-year showed a pop. Talked about it on the economic calendar. Going to be watching this one pretty closely. I just don't really think it's going to go any higher. Markets are still pricing in a cut by September, if not 2 by the end of the year. And 2 cuts would bring us down to that 5% area. And 2 years from now, I expect to be well below that. 3 to 4 cuts during that time frame, which would bring us all the way down to the mid 4s. So it's hard for me to believe this is going to push back above 5 or 5.5 or 5.25. 10-year, similar thesis. It's already at 4.5. Probably going to hang in here a little bit. Momentum on both of these continues to roll to bearish. It is worth noting on the 2-year, it's still holding above that SMA, but you can see it's starting to roll just a little bit. So see how that plays. And then looking at the 10-year, breakdown, retest, probably going to see more breakdown there in my opinion. I just don't think yields are really driving markets. I think they're kind of priced in here. So we'll see how it plays out with the auctions this week. Moving over to bonds here on the weekly, you can see we're back into this range after a dip low. So we're still hanging in there on JNK. TLT, on the other hand, it's kind of in this wedge formation at this point. Big move higher, established that, retested it multiple times. Did have a low, and you can see it was well above this previous low. Rallied back up to that zone. If this structure is going to hold, you want to see it hang in here at 89.16, test that level, and then rally through. Certainly a possibility that would fit with my thesis of yields either kind of topping here or potentially moving lower. So we'll see how it plays. Could absolutely just cut through this and continue sideways. It's not impossible, but to me this looks like a little bit more of a bullish setup on TLT. Even if we get a short-term retrace, hold support, and then push higher is my thesis. Moving over to volatility. Volatility on the weekly chart, basically at these super lows. You can see the low for the week was 1152, so that actually overthrew the low back here from December. You have to zoom out quite a lot to see the last time we touched that low. Back here in November of 2019, that's where we saw a VIX that low. So interesting to see that here. Typically, you do see spikes from there. You can see, touch that level, spiked higher, touch that level, spiked higher. Even back here in July of 18, consolidation went higher. So this is typically where you see it. And it is worth noting, sometimes it takes a little while. 25 November 19. Next week went higher, so that only took a week. Here on 8 August 18, same zone here. We were there actually quite a while. Touched it in April of 18, and then we were in that same zone until October of 18, so consolidation in that zone. And then we spiked all the way up to a 36. Something to keep in mind, this is absolutely a suppressed level. We don't typically stay here that long, but it's all about timing. Might consolidate for a week or two and then roll higher, and then who knows how high we go. Are we going to push all the way to a 36? Probably not. That's what we saw here in February of 22, but it's absolutely a possibility, and just understand that the VIX is at a very low level. Moving over to my accounts, you can see I really don't have a ton of positions on. I pretty much stayed out of the markets on the Friday session. I was busy, and also I wasn't confident in that up move. In most of the major markets, we're just slightly up, whereas the Nasdaq did continue that rally through. Slightly negative on my deltas. I have a 460 for the Wednesday session, 456 here for the Tuesday session. So a slight bearish bias. We'll see how it plays out. Not a ton of deltas, not a ton of theta either. Only 70 theta, so total theta is right around $300 over the next 2 trading days. So see how it plays out. Being very cautious here. I think markets are going to roll to the downside, and I don't really want to participate in that move. Let me know down in the comment section what you think of the opportunities that we talked about. Are you looking for digital infrastructure holdings, or are you looking towards those gold miners? What do you think? Otherwise, what do you think of the markets? Are we actually going to roll down, or can tech prop up the Nasdaq and the rest of the markets here in the short term, or will the rest of the markets weigh them down significantly over the coming weeks? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.